good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday, the 19th of February, 2025. We're just after 6:30 p.m. Central Time. The stock market tonight correcting a bit. It finds it easier at night to break down, and then in the morning, if it's bullish, it seems to come back with a pretty good vengeance. We did today get the FOMC minutes, and I covered them in great detail tonight. My thoughts on them in a special currency report. I decided, remember I told you I was going to update the dollar index report that I did last time. I do it. And I do it in great detail, but I start off covering the Fed minutes and what we've got in front of us and what they might mean. So I think you want to see it. It's at iraepstein.com, our website. Look on the top left. It's right there. So as you look at the markets tonight, you had a neat rally, you held, and now you're giving some of it up tonight. Okay, you still got to a new all-time high, and I'll show you that in a moment here. If the market were to finish right here, this would be a new all-time high close of 61.52. So let's applaud that. If it were, we don't know. I made the lines bolder for you. These are the same lines I had up yesterday, and I had somebody say that they're too faint for them. Not a problem. Here they are. The dashed lines represent no more than lines I've drawn. So what you've got here is a rising wedge, if you think about it. Oftentimes, chartists will say it pushes on it till it forces the market to break out to the upside. We'll see if that is in fact the case, but that's typically what you look for in moves like this. I've seen them where they get up here and they dribble away right apart. So there's no way to know. Here's what I do know. This is your resistance point. You're seeing it form over and over. Had I carried it over, you could almost see how it lines up in through there. That's where the resistance in the market has been. The pattern is one of higher lows, higher highs. I'd be concerned that the market doesn't want to continue on if it got through, and I'll show you this, the lows of 2 days ago, right through here. So if the market gets under 61.18 and a quarter, it could be a sign that the market wants to peak out here and not go any further. Not taking that out, well, all you're going to do is keep drawing that line that we had on the prior chart. It's going to get narrower and narrower in there. Got it? When we take a look at the market and moving averages, you're over all the key moving averages, so that part is bullish. So where's the resistance? Well, you see it. The market keeps coming up to the Bollinger Band and stopping at it, and that's what it should do. All right, now, what it has done, past tense, is it narrowed in the band. See how wide it was here? Now look at how narrow it made the market over there. So it's giving it some energy by narrowing in. Is it enough to get a breakout? Can't answer the question. I can only tell you, unless you take out what I just said, this 61.18 and a quarter, I'm still very much in the bull camp in the market. Are we going to embed? Let's follow. Remember, you can't count Thursday because we don't know how the market's going to finish. But we already have history from Wednesday. Both numbers were over 80. We had both numbers 80 or above on Tuesday. Means they weren't that way on Friday, and they weren't. Tomorrow's a key day, and you're right at a resistance. I want to walk away from that. I don't know which way it wants to go. If it embeds, I get very friendly, the market. In the NASDAQ, you are embedded. So this has been the easier market to be a buyer of. Subscribers, you know what I'm saying. And we will see what this market can do here. Can it get back up to the upper Bollinger Band is going to be the big question. We will find out certainly tonight or tomorrow morning. In the Dow, you've stayed under the 18-day average, so it's in a different world. The other markets are knocking on the doors of trying to make highs. This market's simmered down, and the market that stays weak is the Russell. You have two different worlds going here. You've got the Dow and the Russell doing more neutral to bearish things, and you've got the S&P and the NASDAQ doing their bullish things. When we come over and we look at 10-year notes, in fact, all of them, all I see is sideways action, fighting a battle of sorts at the 18-day average. I think that the pros are trying to sell it right here with stops over that high, not me. But that's what I think they're trying to do. I would walk away from this pattern. Can you get up and over 102 and a quarter and stay over it? That would be bullish, actually, in this market. I don't see anything that can happen right here in the dollar index that I'm willing to talk about. I want you to look at the report. In the euro, this is the area where the market's got to start giving us an idea. Does it have support down here or not? So it's pulled back to the neutral zone, what I call the line in the sand, the 18-day average, and just hanging there. In the British pound, they're now saying no more than 2 rate cuts this year is what the swaps markets are pricing in. So what we're starting to see is the U.S. has kept its rates high. Many of the other currencies have been cutting rates. As you know, New Zealand, Australia, they joined in the party this week. And now some are starting to say, well, we've gotten down so low and the economies are starting to do better. How low do we have to go? Well, in part, that turns some of these currencies friendly, because then they're not lowering rates anymore. And if they're going to start growing and the U.S. is up here where we still have a restrictive number, do we start weakening? And that's the thinking going on. As you know, you're already seeing the DAX and other stock index is around the world take off to the upside in anticipation that that is what's going on. In Bitcoin, you've got a higher high and a lower low. I went back to the February. We should stay with that until it goes off the board or just the day before. I went to the May Brent crude, and that made me also go to the May WTI. Is it early in the May? Yeah, for the WTI, but it's not for the May Brent, in my opinion. So you're right here, you're fighting battles. I see the market fighting a battle right here. The trend is up. I don't like the dollar risk. If you buy it, let's say at the 75 level, and you take a look at this market, let's see if I can get it. Yeah, I can. Your stop would have to be, in my opinion, under the low of 73.90. You got $1,000 risk. If that's your style of trading, okay. It's not mine, or not mine for recommendation of trades either, anything I teach. You have higher lows, higher highs. I see the big support right here at the 18 and the 200-day average. But again, I don't like the risk all the way down here, just under that level. So not for me. When I go to the heating oil market, I understand why the market's up. All I have to do is look outside. It's 8 degrees. The high today's been about 10, but it's going to change. And this is the time of the year where we get more daylight. Sun is changing in the perimeter of the earth. It's going to get warmer and warmer. Higher highs, higher lows. Look for the resistance if it can keep going up through here. But at any point, a warm forecast or warmer can create havoc in these markets. And in the nat gas, you're another day up and over the upper Bollinger Band. So it's 2 days. It could force this market to develop the embedded reading. Let me walk you through that. You can't count tonight because we don't know what that's going to do. But both numbers, Wednesday were over 80. They were that way on Tuesday and not that way on Friday. Tomorrow's a crucial day in the market if it's going to embed. I love when markets embed because you get a bullish signal from them or a bearish. And if they lose the embedding, you get another high probability signal. So it's fun. It's one of my absolute favorite tools to work with. And it changed my life as a analyst for the futures in the stock market when I learned how to work with it. It actually did that. And I floundered for decades looking, what's the right thing? I developed so many tools. And 5 tools finally clicked, and I'm happy. I'm a happy camper. All right. So as I look at how these markets are right now, fun. I want you to look at the report I just put out. As I said, I wanted to do more of these more often, and I will be. But I did the currency report for you, and on this report, to make a long story short, I cover a lot. The seasonals, the weekly charts, the daily charts on both the futures markets and the UUP. So I'm giving you a lot of information there. I take you to the price counts, as we said, everything there, and a full analysis of today's FOMC minutes, because I think it's so important to the market right now. I'm Ira. Go see the report. I'll catch up with you all come tomorrow morning in the morning flash update. And by the way, if I ever miss a link when I mail out anything to anyone, just go to the website. Everything's there anyways. You take care.